Here's an email on July 5th from the UPS Teamsters Union. They wrote the following, a big picture of their entire Teamsters, at least the people who showed up for, I suppose, this event. Anyway, it says here, around 4 a.m., oh, okay, wasn't expecting that one. Around 4 a.m., UPS walked away from the bargaining table after presenting an unacceptable offer to the Teamsters that did not address the members' needs. The UPS Teamsters National Negotiating Committee unanimously rejected the package. Following negotiations, UPS refused to give the Teamsters a last, best, and final offer, telling the union the company had nothing more to give. Now keep this in mind. The Teamsters Union is arguing here that they are simply asking for a last, best, and final offer beyond what UPS is saying was already their offer. So this is it's kind of something that you see in real estate as well, where you'll write an offer as a buyer and be like, all right, look, your place is listed for $450. I'm coming at $430. The seller's like, I'll take $445. Buyer's like, I'll go $440. Final offer. And the seller's like, give me one more last and best offer. And you're like, that's it. And everybody just gets really frustrated and entrenched. Anyway, that kind of sounds like somewhat what's going on over here. Obviously, to a much greater scale with the impact of many, many more people. In fact, up to potentially 340,000 people. That's more than a quarter. That's more than a third of 1 million people. This is insane. All right, so what do we have here? Quote, the multi-billion-dollar corporation has plenty to give American workers. They just don't want to, says Teamsters General President Sean O'Brien. UPS had a choice to make, and they have clearly chosen to go down the wrong road. The UPS Teamsters contract, covering more than 340,000 full and part-time employees, expires July 31st. That's in about 2.5 weeks. That's actually right after the next Federal Reserve meeting. No additional negotiations are currently scheduled. Also not great. The Teamsters have repeatedly made clear that UPS members will not work beyond the expiration of the current contract. In June, rank-and-file UPS Teamsters authorized a strike, but overwhelming 97%. All right, that also already made me a little bit nervous, because when I read that part, look, it's very common for parts of a union to say, let's strike. But then when you get actually down to the union level, people are like, look, do we really want to strike? Like, we're okay with this offer. Clearly, if 97% of folks in these unions are saying, no, we're not okay with these terms, clearly there's a high likelihood here of a strike, which means either UPS provides a better offer or a strike happens. And the last time a strike like this happened was in 1997. In 1997, UPS basically stopped being able to deliver packages for 15 days. It cost the company in 1997 almost $850 billion. The crazy thing is now, UPS is probably even more vulnerable because you have a whole lot more competition. It's not just FedEx or the USPS, but it's also the fact that you've got companies out there like, I'm just going to say it, Amazon, that are like, please give us more of a reason to be able to raise what we could, essentially, hire workers with. And if we have a larger worker supply, then maybe we can actually get experienced workers faster. Now, I'm not sure if Amazon is looking to kind of recruit from UPS, but it'd be very interesting because you potentially end up having this larger shift of individuals from UPS to maybe other companies, especially if these individuals do have to go on strike and they get frustrated with the ultimate resolution of this. I do expect there will be a resolution, but the bigger problem will likely be not so much the benefit to the other shippers, the DHLs, the FedEx, the USPS. The bigger problem is going to be, what is this going to mean for supply chains? If UPS delivers 37% of the parcel market by revenue, which is larger than FedEx by 4 percentage points, double what the United States Postal Service is, and triple what Amazon Logistics is, then all of a sudden you potentially have a real snarl in supply chains. Now, the good news is our economy does have this insulative buffer of inventory. And even though we've thought that we've run through most of our excess inventory, most of the individuals who most of the businesses who have gone through the last, 18 months or so still actually have some degree of excess inventory. Nike was supposed to be one of the big winners in this environment where Nike was in a position of pricing power was the idea. I didn't think this was true, and sure enough, in the last earnings report, you actually had Nike basically begging for more discounts in the earnings call. It wasn't a good look. It wasn't a good look at all. You basically had them going, we're going to be discounting. Sorry. And that's, again, because most businesses seem to have more inventory than they've had during the supply chain crises of 21 and 22. So will potentially an extra 1 to 3 weeks of delays via UPS have a massive impact on our economy? Obviously, it's hard to say. There's a real potential that it could. The places it's probably going to have the biggest issue are going to be in areas where companies haven't stocked up enough inventory. It would actually be prudent now to potentially start pre-ordering more inventory if inventory is tight and somebody is regularly using and relying on UPS contracts for parcel delivery. Maybe get that inventory ordered now so we don't end up in supply chain snarls like we had in 2021. So again, if companies have enough excess inventory, then maybe 2 to 3 weeks of a supply chain disaster with UPS wouldn't make that much of a difference because we have this available sort of buffer of excess inventories. However, it's still likely going to create some form of a hit to GDP in that quarter. And this could be bad because of the psychological implications. Imagine if the UPS strike goes on long enough and slows ordering down or long enough to where all of a sudden we have a consumption slowdown or a temporary consumption slowdown that ends up hitting CPI and ends up hitting GDP. Now the question is, okay, are we paying more for shipping rates, leading to higher core services costs, which would be bad, as well as potentially higher goods costs? So now all of a sudden it looks like inflation is reanimating on the goods side and the core inflation side. And then you end up having less GDP output just by a marginal difference, but you potentially end up going negative for Q3, which is basically what the bears have been calling for all along, that, we're going to go negative GDP in Q3. Well, now you potentially could have, who knows, but you potentially could have UPS strike contribute to the start of an actual recession, which could then become self-fulfilling once data starts coming out. So I think the issue is actually a lot potentially larger than I initially suspected, and that's my fault. I should have covered it earlier, at least about a week ago when this really started, but I'm covering it now. And what I thought was very interesting is some of the research I was looking at indicates that UPS is potentially more vulnerable to this strike now than they previously were. Now, there is this potential as well that this additional vulnerability actually means UPS would be more likely to try to solve this issue sooner rather than later. I would highly anticipate that you're going to have some really serious negotiations, probably between the 26th and 31st, and it wouldn't surprise me to see some form of near deal struck by the end of the month. And then even if maybe you get a day or two of striking, I think you'll end up seeing UPS bend, or the teams, somebody's going to bend. The end of the month is Monday the 31st. I cannot personally expect this to go on beyond August 7th. So that would be about 4 days of striking, 1st, 2nd, 3rd, 4th, and then you have the 5th and 6th of a weekend. So I find that potentially a likely outcome, that this strike ends up going away by being solved. It'll be a last-minute negotiation, much like a debt ceiling negotiation that you really get in Congress. But I do think that it is quite interesting that UPS reports their second quarter results on August 8th, which is just literally a few days after when I expect this issue to be resolved. Now, personally, I want to make it clear I'm a big fan of making sure your employees are paid well and if not even overpaid, whether that's a combination of benefits or just pay or stock-based comp, whatever it is. I'm a big fan of longer-term employees getting paid very, very well. And, I hope UPS can figure this out, not only because I don't want supply chain problems and I don't want issues with the economy, but also because I think I think there's an opportunity for UPS and the Teamsters Union to figure this out. But this is definitely something that's a little bit more intense, I suppose, than potentially first thought. So I would pay attention to this over the next few weeks if you haven't yet. It's one of those near-term catalysts that just isn't fantastic. There are actually surprisingly few near-term catalysts. I was talking about this yesterday. I was saying, really, once you're, what's it called? Once you end up getting, gosh, where am I trying to go with this train of thought? Hello. Once you get through the CPI report and the Fed meeting, your near-term catalysts are somewhat far and few between. A lot of bears right now are arguing that, oh, don't worry, the election is coming, Kevin, and when the election comes, that's the next catalyst. And I always think it's funny that when bears start talking about the election cycle, it generally is a warning to me that the bears have run out of bearish things to talk about. But anyway, I do find it very interesting that at the same time as you have this potential strike, the freight industry is technically in a recession. And this is worth considering because that's probably putting a massive squeeze on a company like UPS. And so this is where there are always two sides of the story. It's not just the employees, but it's also the actual, business model, what's going on. Obviously, any individual versus a company, it's always sort of like, hey, like an individual deserves as much help as possible. But now it's 340,000 people. I mean, it's basically a company versus a company, it feels like. Or it's a company versus a few individuals who's left, outside of this. But what we found very interesting is that parcel volumes are down anywhere between 20 to 30% across the board. I mean, freight, parcel, overnight, international, you name it, domestic. It's intense how much volumes have shrunk for shipping. To some extent, it is also possible, and this is the more, I think, sinister potential point of view, but to some extent, it is possible that, and again, this is going to sound rough, but it is possible that UPS is like, please, let's get fewer employees. In other words, have some people leave because maybe we've overhired. That is a real risk here, that potentially UPS has seen so much of an earnings recession and freight recession. They're like, we are now overstaffed. We can't fire people. Maybe if we go through a strike, some people get so pissed they'll just leave, and then they're gone without us having to fire them. Again, that sounds very insensitive. I'm just thinking out loud here about how there is that possibility that UPS hired for shipping volumes that were 2021 level, but now you're actually at 2023 dumpster levels of shipping. That's not great. Now, Bloomberg Intelligence argues that the UPS negotiation is a huge opportunity for FedEx. That not only is there let's see here, contract expires July 31st. Last time they went on strike, we talked about that, from 1997, cost $850 million. This is an opportunity for FedEx. It is, they don't believe that a prolonged walkout is likely. Okay, that's interesting. That's actually somewhat similar to what I think. I think you're maybe at a week max, a business week max for a walkout. So they agree with that. And at the same time, if we look at their earnings, Let's take a look here. We can see exactly what's going on in comparison here. So look at this. Here are their revenues. This is UPS 2023. This is on their latest 10Q. And what you'll find is that your next day air revenue actually is down only about year over year here, 5% at UPS. And it's volumes that have really been getting hit. But they're keeping that revenue up. Look at that. This is actually a good argument for the union. Negative 15% on deferred, and then ground is actually positive. So even though you've had some of these volume crushes, they're actually positive on what they're charging in revenue for ground. Now I wonder how their costs of goods sold has moved. Let's look at COGS. So we'll go over here, and oh, how interesting. So their revenue, their top line revenue, has gone down 6%, and their compensation and benefits has gone down about 1%. So you are getting a bit of a squeeze here, and you're not seeing as much of a crush at UPS as you certainly are at like a FedEx, minus 1%-ish, 1.2% over here. So you see that margin squeeze there. Your operating profit, for example, at UPS was 11% in the last quarter, and then last year you were at 13.3%. So you've definitely seen a margin squeeze here, 11.1, 13.3%. And that's probably contributing to some of UPS's frustration, along with what's going on in just the rest of the industry with volumes being down so much. They look at FedEx Investor Relations. May as well take a quick peek over there and see how they compare, because that might also give you an idea of, hey, would FedEx even be hiring en masse? I mean, how much do you need to hire in a freight recession? So that does potentially weaken some of the positions of the union workers for UPS. So we'll go ahead and just briefly look at FedEx and just see how they compare. But either way, there are some broad implications to this, to the entire situation between UPS and the union. I think this also, all of it reiterates why you have a lot of companies that are very, very afraid of unionization, whether it's Amazon or Starbucks or, quite frankly, even Tesla. There's a lot of fear about unionization because unions can be very, very strong, especially when they have a coordinated union vote. So if I look at, let's see, revenue by service type, and then we've got, I want to find volumes at FedEx. I don't think I can quickly find those at FedEx. That's okay. That's revenue by service type. Let's just look at their operating profit and just compare. Okay, so here's the FedEx statement. Quick look at their operating profit. If we look at 22,169 in rev, pretty actually close here to what you have at UPS, 1042. Wow. All other things be assumed equal here, FedEx is only sitting at about a 4.7% operating margin, which is less than half of what you have at UPS. So, that doesn't add well to UPS's argument that they wouldn't be able to support additional compensation when they already seem to have an industry-leading margin, despite the volume recession that they're in. Wow, it's incredible. So this gives us a really good look into what's going on, in my opinion, at least a surface level here look about what we're seeing with the UPS strike. And I would mark your calendar for the 31st of this month and really pay attention to what ends up breaking down here or coming out of this. And you will probably, again, my guess is, hear a lot more about this on the 27th and 28th, which is really your last business days before the Monday the 31st. But I personally wouldn't want to pull it out to that low of a level, or that close rather, should I say. Yeah, I'm just looking at FedEx here. Their freight revenue, this is where you hear about that freight recession a lot, down 13% in revenue year over year. Total So let's see. Then we've got package revenue 7%, international priority 14%. All of these are negative, and these are revenues. So it's a sign to me that if volumes are down in the excess of 20%, pricing has come up. And it's also likely that the individuals delivering packages have seen pricing move at UPS and with the other companies like FedEx and that. So again, more bargaining power here for the workers. Now, I want you to know this: when it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced by